Good morning, ladies and gentlemen. Hope you can hear me. I just literally got off a plane and put my suit on. My plane last night was cancelled from Istanbul, so I'm going to move forward fairly quickly. We've got quite a lot to go to. The usual forward-looking statements, of course. Red Crescent, what it's all about. Very unique story, somewhat different to what you're used to. If you're looking for conventional things, don't come here. Our previous speaker talked about if you don't believe in China, then don't invest in base metals. I would say exactly the opposite. Red Crescent is irrelevant to what happens in China. I say that again, it's irrelevant what happens in China. Red Crescent will continue. We're capitalising on Turkey's metals potential. We're a first mover in the areas we operate in what's essentially a new emerging metals province and a new emerging mineral economy. We have 3 base metal projects, exceptionally strong local relationships. We already have an offtake agreement and strategic partners in place, and we've got a lot of forward momentum. Our vision really is to capitalise on this mineral potential in Turkey, which I personally discovered in 2004 and have been actively involved in since that time. And unlike the previous speaker, we are builders of mines and process facilities. The Red Crescent team are not explorers by training or by nature. We find things and we build it. That's what we do. We do have, fortunately, assets that have world-class potential and to be in the low-cost quartile of the cost curve, which always helps. Why Turkey? People always ask this. It's one of the biggest things we have wherever I go, whether it's North America or London or anywhere else for that matter in recent times. Well, I think everybody's seen in the press recently and are starting to become aware of this amazing place. 16th largest economy in the world, 6th largest in Europe, fastest growing OECD economy, member of the EU Customs Union, and hot off the press, 2 days ago, the 19th of September, the Turkish state was awarded by Standard & Poor's full investment grade. That's a very, very big achievement, and the press are saying that all the other ratings agencies are set to follow. There are a lot of other fundamentals there in the internal banking system, which has the highest liquidity ratio in the world right now, very high savings ratio among the population, 85% of the gross national product is fueling internal consumption, only 15% goes to the outside world. So it has a very powerful engine that needs a lot of commodities to feed it. Society is very modern there, it's secular, strong rule of law. The law is absolutely enforced, there is virtually no crime. I've lived in the country, as my entire team do, since 2007. One of the rules of RCR, we're not a group of people who live in Florida, raise money in Toronto and London and have a project in somewhere in the world that we don't visit. If you want to work in RCR, you live in the country. Our entire team is resident in Turkey. 67% of the Turkish population is of working age, and interestingly, 80% of them are under 30. Again, why Turkey? World-class investment banking and financial system, investment-grade state financials. We have a world-class, very clear mining code since 2004. I got involved in it in 2005. We've updated it twice since, and we've recently promulgated some new regulations which make it a very transparent shop window for foreign direct investment. Security of tenure is absolutely guaranteed, unlike the DRC and other more risky destinations. It's very clear in terms of royalties that are fixed and they're very low levels. Significant foreign direct investment incentives. RCR, for instance, in most of the areas we operate have 10 years tax-free window from production. All the social security payments of our staff in the far east of Turkey are contributed 100% by the state, and our royalties are cut to 50% of the norm. We also have zero-based import duties on any technology and equipment that we choose to bring in to the country, and that includes intellectual capital for application on our projects. So these are very significant incentives indeed. What is there in Turkey? Copper, zinc, lead in the base metal space, chrome, manganese, iron ore, coal, all significant deposits, a great deal of them untapped up to now. In terms of workability and logistics, in the west of the country, West Anatolia, you can work all year round. In the east, if you're Canadian, you can also work all year round, but there's very, very cold temperatures, down to -40, heavy snow, and you really get a full 9 months at exploration level. If you're underground, you could work for longer periods, obviously. And most of your process plants, you plan to have them well below the snow line and out of areas where you can't work. We've got very good roads, particularly on our blue chip projects in the Far East. We have backhauling opportunities from the far eastern corner, Hakkari, to the Mediterranean. Hakkari is a city in the far southeast of the country where our one of our flagship projects are situated. Excuse me. And that area is a staging post or a hub for distribution of goods and services into northern Iraq and northern Iran. So everything comes in, about 400 trucks a day. Pantechnicons come from the Mediterranean ports on a good metalled highway all the way to Hakkari, and all those trucks go back empty. So there's a big backhauling opportunity, $25 to $30 a ton to send concentrates or DSO all the way back to the Mediterranean ports. And historically that's what happened. We have cheap power, subsidized in that part of the world, hydropower, down to as low as between 6 and 8 US cents per kilowatt hour. And we have water use licenses, which are very easy to get hold of, and 3G telecommunications on all our sites. So you can see first world conditions, low risk, and the ports, very important in the Mediterranean, very experienced with DSO and concentrates. There's a lot of people have been shipping out of there for many, many years. Typical export markets you see there: China, Bulgaria, Russia, Iran, Saudi Arabia, UAE, and Southeast Asia. Southeast Asia, I'm talking about Thailand in particular, that has some base metal smelters. And there are a number of other listed players that are operating in Turkey, some of whom are on AIM. Alès Gold is Canadian, Aldridge, Inmate, Eldorado, Ariana Resources is the one that in London most people would know of. What is our primary focus? 3 core base metal projects. Hakkari Zinc also has lead and silver. Sivas Copper also has gold. Tufanbeyli Zinc also has lead and silver. We have some secondary targets as well. In Hakkari we have a very significant porphyry copper signature which we're currently investigating. We have another Cyprus VMS type copper deposit at Yaman. We have a manganese mountain in Hakkari, and I don't use that terminology lightly. It's literally a manganese mountain, geometrically estimated at 500 million tons at 48% manganese, which we're busy looking at. Kayseri Zinc, which is another significant old historical mined area which we're now looking at in bringing into the fold. Some of the project locations you see in the far right hand corner there, that was the founding area of Red Crescent Resources. Initially investors were very worried. They said, well, what happens if it all goes wrong down there? Maybe you should diversify. So we have diversified, still focused on Turkey, but to the west, in areas which other people see as more or less safe. But the truth is that Hakkari is very, very safe, and I would say safer than the downtown areas of most world cities. Let's talk a little bit focused on the projects themselves. Hakkari Zinc, historically mined direct shipped ore of 600,000 tons at 25% zinc. It also goes lead and silver. We have currently defined potential for at least 50 million tons in situ. How have we done that? That's been done by mapping of outcrops, exposures of mineralized material on 3 sides geometrically over very large areas on our licenses, and I'll show you some pictures of that shortly. We are in the process of rehabilitating some of the old mining areas and underground. We recovered out of the one in the picture 1,000 tons at plus 15%. It's on stockpile at the moment. We have started new mining in some areas, and we're just about to ship 2,000 tons of DSO ore at greater than 25% zinc. That's going out of the Mediterranean ports at the end of this month, and we plan for the balance of this year to do in total about 8,000 tons of DSO this year. So we're into cash already, we're generating cash. Surface and underground mining we're going to be establishing in 3 core areas, and we've changed our exploration philosophy. When we started these projects post our listing in 2010, we were applying, I was listening to my geologists, and we were applying conventional exploration theory to a very unconventional area. We've thrown that out now. It's a waste of time. We spent a lot of money developing roads into mountains to drill holes that delivered very limited resources over a long period of time because of the very steep nature of the areas. We've now going underground. 80% of our exploration from here on in will be done underground diamond drilling from old and new excavations. And we will develop resources as we mine and as we produce. So we're going to mine, cash flow, and generate resources and reserves at the same time. We have massive exposures of mineralized material over many kilometers, so this is feasible for us to do so. We are drilling a phase 2 drilling program on surface, infill drilling from last year's program, and we're looking to upgrade the compliant resource to 10 million tons at plus 15% zinc, but it's not our main value driver now, given that we've got this 3-phase strategy. This is a picture of some of the guys underground in the underground workings. This were done by hand-got methods. These particular excavations were done 15 to 20 years ago. They did very rough board and pillar mining, room and pillar mining, all by hand. The mineralized width here is in excess of 10 meters. The average grade across those areas is 25% zinc. This is one of the core trays of the ore. The ore is the brown material, the oxide material in there. That's an XRF spectrometer machine, handheld. That gives you an example of the grades that we're dealing with. That's 30% zinc, 2.5% lead. It's also got some small amounts of copper, cobalt. It's a polymetallic ore body, and it varies across the range. There's another one, 34% zinc, just to show you this is not a dream, and another one, 25.8. Most of what we find in the exposures we have is in that sort of range, so exceptionally high. Let's talk about the mineralogy, because everybody's waiting for the catch. There isn't one. We have, on the oxide side, we have smithsonites, okay, which is grades from anywhere from a low of around 7-8% all the way up to pure botryoidal or crystalline smithsonite at 52% zinc. We have cerussite, lead carbonate, and then we have the iron mineral. The brown staining you see is the goethite mineral, and within the matrix of the ore body we have it's free iron, so it precipitates out very, very easily. We also have the sulfides. We have some galena, and we have crystalline sphalerite, and we have barite in the matrix. So here we have, we've done some extensive mineralogy studies. We brought Professor Berrington from the Natural History Museum from London and Professor Maria Boni, one of the world's foremost experts on Mississippi Valley type deposits, to do some work on what we've got. And we've delineated that we have a multi-phase oxide and sulfide ore body. So we have primarily massive oxides with secondary sulfide mineralization within the matrix. So essentially this is a new type of Mississippi Valley type ore. It's now called Hikari type. It's polymetallic. It also has copper. In some places it goes as high as 0.2% copper. It has molybdenum, it has tungsten, it has cobalt, and it also has rare earth elements. So this is a whole potpourri of things which we have to unravel to get the best methodology to realize the full value out of all these elements that are inside the ore body. But in the short term, we're focusing on taking the zinc and generating cash from that. Give you an idea of the sort of exposures we're dealing with and why we changed our strategy. This is one of our licenses, license 26. It basically consists of a mountain 3,000 meters high. The license area is about 2.5 kilometers by 4 kilometers, and our previous exploration director put these roads in, and he put these drill rig where he was going to drill these holes, and you can see a drill rig there on the picture on the left. Really crazy. When we had a look at this, you drill those 4 holes, and where do you go? 20 meters behind you, you've got a massive mountain. It's a waste of time. So what we are now doing is we've now trenched open the entire outcrop, and we've tracked it over 2.5 kilometers around the mountainside. It's 4.5 meters wide on average, oxide and sulfide mineralization. XRF readings on average are 20% zinc and spot readings are 49% zinc. So what we're doing now is we're coming in and we're putting in a twin decline system on mineralized material straight into the mountain. We're about to appoint the contractor, and we will open up this area. We will generate direct shippable ore from the development work, so it's self-funding, and at the same time we will then create underground drill platforms, and we will be drilling with diamond drill machines ahead of ourselves and laterally to delineate the resource and the reserve as we go. The metallurgy. Pre-concentration of ore by gravity methods has been exceptionally successful. We get a 2 to 4 times upgrade for a product of a direct shippable concentrate product of plus 25 to 38% zinc. We've worked with a company in South Africa, and we have a gravity machine, which is a particular configuration of a number of gravity machines using heavy media separation plus cyclones, spirals, and the like to generate these results. And we have 2 that were manufactured. They have just been wet commissioned, and they're going on a ship at the end of this week, and they'll be heading out to Turkey. So we should be producing concentrates before the end of this year, and selling our first concentrates too. On a secondary basis, we've looked at high intensity mag separation. We've got some very promising results from that. The reason for that is to get the rest of the goethite out of the matrix, and along with that comes the sulfide mineralization as well. We haven't done any pyrometallurgical tests yet. One of the potential routes for us is to calcine the ore and then produce a zinc sinter. We will be looking at that during the early part of next year in our pre-feasibility study. But our hydrometallurgical tests look very good. With a relatively weak 20% sulfuric acid leach, we get 85% recovery. And we've done some alkaline leach testing. It's looking reasonable. And at the moment we're in talks with Alexander Mining for the leach process, so that we can enter into some studies and take some bulk samples and look at that too. So we're trying to define a suitable process route going forward for bulk. That's what our semi-portable machines look like for the projects. The green one's going to Hakari, the blue one's going to the Tuffan-Bailey project. Tuffan-Bailey zinc, this is a project which, as you saw on the map, is approximately 800 kilometers to the west of Hakari, but it's also Hakari type mineralization. It's part of the torides, the same geological belt that flows all the way through northern Iran. There's a mine there, some of you may know, called Angaran, which historically is known as the largest zinc oxide deposit ever found, and it was also very high grade, about 22% zinc. The Hakari ore we have is much higher grade than that, and our resource is much bigger than that too. Tuffan-Bailey is an extension of that. Historically there was some direct shippable ore from this area of 23% zinc, but most of that's gone. The ore body here is a much lower grade ore body. On average it's probably closer to 10%. We did an initial 43101 report on this, and we're now doing some infill drilling on it, but we are using the same tactics operationally here. We're going to be mining from surface, mining from underground, doing infill drilling on surface, and also doing resource development underground. We've just had our plant EIA and forestry permits approved, and we had a gap in our licenses, a very narrow gap, which was an error when the licenses were actually put together. We've subsequently closed those gaps as well, which is good news for us. We have recently done an independent ore reserve model for this, based on the Q3 43101 resources that were reported, and we've also mapped out all the existing mine openings. We're doing an independent mine design study at the moment, so that we can really get in there and start mining to PFS level, and we will be in early open pit mining and concentrate production towards the end of the fourth quarter. In summary, Tuffan-Bailey, we believe it'll eventually may prove to be up to 20 million tons of mineralized material, grading 8 to 10% zinc. It's not a world beater like Hakari, but what it is a very, very nice project that can generate significant cash in the short term, in order to reduce our reliance on raising further funding so that we can invest in our other projects. We move on to copper now, our other flagship project, the Sivas Copper Project. We acquired and entered a JV, this and then entered a JV with Petmin, a South African and London listed company in the second quarter of this year. This project has defined potential for 300 million tonnes at plus 1% copper. That is world class by any imagination. And those are not our numbers. Those are numbers that came from the previous owners who were involved in this. They were defined by Falconbridge, a very reputable base metal company, pre the Noranda takeover. They lost this project. We are told, it's hearsay, but we were told by people that worked in the team at the time, the project was lost to Falconbridge through administrative failures during the hostile takeover by Noranda. Whether that's true or not, we don't know. The fact of the matter is, we own this project today. We have all the geochemical database, we have all the exploration databases, all the geophysical databases, and we have now subsequently independently confirmed the defined potential. We did that in the second quarter of this year. We've subsequently done some new soil sampling and geochem over the entire area, and we got an average of plus 5% copper grades in the soils, on surface, over the ore body. We're now drilling on the site. The Sivas Copper main zone, hole number 1, which we have just completed, gave us 80 metres of mineralisation at plus 1% copper and gold. By XRF, we're looking at an average of around 5-6 grams per tonne, 5-6 parts per million. Obviously, those need to be confirmed by laboratory test work, but that's a very significant first hole in the main zone of this mineralised area, defined originally by Falconbridge. We have a southeast zone as well. There's some of the mineralisation, and this is again it's a carbonate hosted ore body, and it's been subjected to multi-phase mineralisation. There's a massive pluton, a batholith very close by, within 8 kilometres of this area, that's put a lot of fluids through these sedimentary areas, and hence we have all the oxide minerals and we have the sulfide minerals as well. We have here malachite, chalcocite, bornite, azurite, chalcopyrite. We've got all 5 of them here, and we have spot grades well above 10% copper in places. This gives you an idea what it looks like. Looking to the northeast, the main zone breccia, as we call it, it's a thrust zone, the carbonate hosted breccia where all the mineralisation is. It averages 100 metres wide, over 2.4 kilometres long, and we believe it's dipping at about 65 degrees. How do we know that it's such a large ore body? Well, fortunately you can't see it in the picture, but in the valley below, we're looking here from one of the Falconbridge drill platforms. There is 2 adits that go approximately 200 metres at the base of the mountain that were mined by the Russians in late 1930s, pre-war. And they mined, the historical data says they mined copper here. They were mining malachite at 15 to 20% copper with gold. Again, we don't have any formal proof of that, but we've opened up these excavations, we've gone inside, and we found the mineralisation in there. So we know the vertical extent of it is, in this particular area, is at least 300 metres, and it's 100 metres wide and it's 2.4 kilometres long. So, with a specific gravity you can do the math. It's very, very sizable ore body. That's looking behind you again to the southwest where it continues. This is one of the core trays from the 3 holes that Falconbridge drilled. These were lost. Nobody knew where they were. And a week ago, 10 days ago, we found them in an old barn on a farm about 5 kilometres from the site. We've been searching for them, and we've now found them. We're going to resample them. We've already done XRF readings on them, and this particular hole is about 200 metres, and it's mineralised almost the whole length. One of the holes is totally barren. We believe it was a deal hole. It was drilled for some unknown reason. And the other hole, the 3rd hole, we've only got about 65 metres of core. It's been messed around with, tampered around, shuffled around, but it is fully mineralised. Obviously these holes we're going to re-drill and we're going to twin them, because we have found from the core boxes we got the coordinates and we were able to find the old collars of the holes. So RCR, some competitive advantages. Well, we have a very experienced management team. Our reputation with Turkey's government and the mining community is really first class. Our operations and management teams, as I said, are resident in Turkey. They don't operate remotely. Our relationships regionally are dominant in terms of our local partners. For instance, in southeast Turkey, our partner there, the Seyitoğlu family, are economically the most powerful family in that part of the world. They're big philanthropists, and apart from that, Baba Seyitoğlu, the head of the family, is the Hajj, is the religious head of southeastern Turkey also. And these are the level of the partners we have. So literally with them we control about 1 million square kilometers of ground in southeastern Turkey. A massive area, a veritable treasure chest, which over the years to come we will be able to unlock. Also, as I said earlier, it's an unmatched foreign direct investment environment. That's just a little about the management. The only person non-resident is Rick Heel. He's our CFO. He's based in Toronto. Doug Taylor, he's ex ISCO Mining, JCI and Exaro Resources. After he retired, I brought Doug to Turkey. He came and joined us. And then a couple of Turkish guys who are very experienced in those minerals in that part of the world. Our current financial situation, those are the June numbers, but in brackets I've put our current physical situation. And I put real dollars, Canadian dollars, not the other stuff. We have about $1.5 million in cash, 1.8 working capital, and that excludes our inventory base of our DSO ore and material that's available to feed the concentrators. In that, we've probably got embedded value of probably net cash of about $500,000 Canadian as well. And we fully funded to November. We are looking right now immediately at doing a further fundraising that will take us through to the end of next year, when we believe we'll be fully self-sufficient in cash, up until we can complete our bankable feasibility study, when we would then obviously come for construction capital. So we were talking to people in London and Toronto at the moment, and I'll be talking to a few people over the next couple of days. Our budget for this year, just some financial highlights, around 9 million spent this year. So recent milestones: 4311 resource estimate for Tufan Bailey. We have one for Hakkari. Sivas copper potential confirmed. We had an equity purchase by a company out of Geneva and London called Link Investments. They're a very experienced team in the trading area. The CEO of that company worked before Transamine. He was one of the partners of the Transamine group. He went on his own. We have a marketing agreement with them, and they're handling our DSO and our concentrates for the next 3 years. And they advanced us a $1.8 million soft loan for the marketing agreement and offtake also. Our rehabilitation plans for the mines are going very well. We have the adoption for Diamant copper. And lastly, very recently, an architecture which we designed for base metal production hub at Mersin Port was approved by the Turkish government. And this is very significant in our future. I'll tell you a little bit about that shortly. Upcoming milestones, well, we have a lot of news that will come out between now and the end of October. Results on drilling from phase 2 in Hakkari, and trenching and channel sampling from underground. Update on Sivas drilling, the deployment of the mobile concentrators, initial drilling results from Sivas, phase 2 drilling from Tufan Bailey, trenching and underground mine channel sampling, and then the concentrates and our first cash flow also in the fourth quarter. Bit longer term, diversification in metals. Of course, you saw the polymetallic nature of our ore bodies and the opportunities we have in Hakkari, given that we also have manganese there, we have chrome, and we have other things too. I mean, there's also potential massive for hydrothermal and epithermal gold projects in their own right, areas in which we control. We haven't even touched them yet, but they're available to us. We will continue to acquire projects and consolidate within our areas around our core projects, and we want to complete the Mersin port metals production hub, which I will talk a little bit about now. So world-class assets and a low-cost producer. Our ticker's RCB. We main board TSX listed, not the venture. Our most recent share price a few days ago was 40 cents. It's gone between 25 and 99. Our shares outstanding 92 million market cap, just under 40 million Canadian, and we've been listed less than a year. We were listed on 5th of November 2010. So as an investment summary, capitalizing on Turkey's potential, and I want to emphasize at this point what I said earlier, that it doesn't matter what China does for RCR. Everything that we are doing is based on feeding material into a massively growing economy in Turkey that is a net importer of LME grade zinc, lead, copper. It imports iron ore, it imports coal to mix with its low quality lignites and brown coals for its coal-fired power plants. It's been exporting very disingenuously unbeneficiated materials, zinc oxide ores. It's been continues to export large tonnages of unbeneficiated chrome. Those days are over. Those days are changing. There's going to be some punitive tax laws coming out to stop export of unbeneficiated material. Certain regulations are going to be brought into force, and the government is very much determined to become self-sufficient as soon as possible by utilising its own in-state resources for its own economic growth. And we are very much at the forefront, and we are spearheading that charge going forward. We have the 3 projects, as we said, and a strong project pipeline. We have opportunity for consolidation, early cash flow, low-cost producer, world-class assets, and downstream processing control. I want to talk a little bit about that. Just on our capital structure, we don't have a massive amount of liquidity in our stock at the moment, and perhaps we've had a little bit of criticism about that. The insiders, 55%, management's about 51%. Personally, I own about 35% of the company. And then you have the institutions, PECMIN, and then the retail. We want to change that with the current upcoming offering and try and broaden the net. I just want to go very quickly to this investment project. This is the LME grade metals and ferrometals production facility at the Mersin port. Okay. Really, it's about a complete new facility to produce 240,000 tonnes of zinc, 140,000 tonnes of lead, 400,000 tonnes of copper, 210,000 tonnes of ferrochrome, and 140,000 tonnes of ferromanganese. The ferrochrome and ferromanganese is to feed a brand new stainless steel industry in Turkey. Turkey has the 10th largest steel industry in the world, currently producing about 38 million tonnes a year of steel products, all for internal consumption. Okay. It currently does export to Saudi Arabia about 5 million tonnes a year on an export trade deal they have, but the rest goes internally. The idea is to create self-sufficiency. This project was architected and designed by myself. We started with this way back in 2005 through successive ministers and with the current government and the state, and it was finally, I got it all, the Prime Minister. It's been adopted as a major project towards the 100th year of the Republic, which is 2023. So over the next 10 years, they want to come to a point where they will be self-sufficient in these metals. RCR currently holds 50% of this project. Another Turkish company nominated by the state has the other 50%. The state will put in infrastructure development, they will free issue the land, and so on and so forth. We will be the project developers. The end game that I see for RCR and RCR investors is, I hope we will end up with somewhere around 10% free carried interest at the end, which potentially could give us $300 million net cash flow every year on an annuity income basis going forward. And of course we have a captive customer for everything we produce from our mines. So that's the architecture. Basically it's a hub like that, 5 lines for zinc, lead, copper, ferrochrome, with a port. The government intends to make it a tax-free zone, or a free economic zone as they call it. There's many other things they want to put in this free economic zone, but our facility would be there. It would be tax-free in, tax-free out, which also would be a big advantage. The project timeline, Very much we're active with developing the zinc-lead copper projects in exploration and feasibility. We're looking at the whole project being, in production by about 2020, somewhere around there. This is an interesting picture. This is what would happen if Turkey doesn't do this. The only potential Achilles heel for the Turkish economy is a balance of payments or current account deficit, because it's having to import all these commodities to fuel this massive engine of economic growth in the country. If it doesn't do anything and continues the way it's going now, it will have a $140 billion balance of payment deficit by 2023. That's a compelling argument for spending $8 to $10 billion to put a metals hub in place in your country to tap into all your resources and make yourself self-sufficient. So that's the fundamentals behind it. Ladies and gentlemen, that's Red Crescent Resources. I hope we've enjoyed the story, something a little different. It's been a pleasure talking to you. Thank you very much.
Thank you very much, Alan. Are there any questions from the floor? I can see some hungry eyes out there. It is lunchtime. We're going to thank you, Alan, once again. If there are any questions directly, you can contact Alan
I am around,
in the lunchtime.
Yes.
So thank you very much once again.
Okay.